Okay, you guys on Zoom, can you hear me? Kathy, can you hear me?
I think
Yeah.
I just started like.
Say something. I want to see if I got the right speaker up on here. Say hi. Unmute yourself.
Hello, yes, I can hear you. And see you.
No, I don't hear you. Hold on. Okay. Have I ever had like a start to Zoom and training that's just gone completely through? Yeah. Kathy, I still don't hear you. Hold on. Is it your mic or me? Oh, maybe it's the volume.
You just need a designated.
There we go.
Can you hear me now?
I can hear you. Thank you. Thank you.
Okay. Are we ready? Are we there yet?
We're ready. Sorry.
That's okay.
I wanted to record this because I know there's good stuff to be shared and it wasn't working. So I had to fix that real quick. So Mark, good to see you. Chase, Nicole, good to see you guys. Let's get started, shall we? Or how late are we? 7 minutes. Oh, so what was I gonna say? So this is gonna be an awesome program. When I started real estate, I had kind of like a niche, I guess, what I do, like sellers, I concentrate on a specific type of seller, buyers, a specific type of buyer. I got other buyers and sellers, but that was my talking point. That was my audience. That's what I love about this is having a specialty. Like if you wanted to do homes for heroes, I specialize in helping first responders, teachers, healthcare providers, those that he's going to talk about. I love having a purpose behind what we do, right? Instead of just transactional based, but helping someone. So I'm excited for today's training. We got Chuck Olsen and Braxton from Luneta Home Loans. A lot of you might know Chuck. So I'm going to have him come up here and get started, introduce himself a little bit more. Hey. And we're going to get right into it. And while he introduces himself, I'm going to share the screen, hopefully correctly, and we'll get right into it. So here's a little clip here going up here. Okay. And let me share the screen. So you guys, how are you all?
Good.
Oh,
Right.
You can talk, Chuck. Don't mind me.
All right. Well, I'm excited to be here today. My boss, Braxton Young, is one of the three owners of Luneta Home Loans, is also here with me today. Going to give us a little bit of kind of a down and dirty about Luneta Home Loans, a little bit about our background, where we're from, and then I was going to dive into the Homes for Heroes program. So,
Did you want to start with that?
let's do the video.
What?
So this is just a quick little video about.
Turn off your club music.
You serve our communities loyally, and it is our honor to be able to serve you and your family with your real estate needs just as loyally as you serve our communities. Contact us today and let us help you get the hero rewards that you deserve.
All right, so just go over.
No, it's not on.
That'll do.
Integral part of the process.
Yeah.
That's right.
My name is Chuck Olsen. I'm with the Luneta Home Loans based here in South Jordan. We are a mortgage broker. I was with another company actually for a long time. I was with a retail lender called Summit Funding, and I had briefed once before. Long story short, as a retail lender, I felt like I just wasn't able to serve my customers effectively with making sure that they have the best prices, best possible deals, and the best customer service. All those things were very important to me. And long story short, I'm a retired Air Force veteran. Serving and working with other vets is very important to me. And I had a softball loan sent up to me for a vet with great credit score, looking to buy a $500,000 house. And I priced it out with the company that I was previously with, and we weren't even close. And I lost that loan. Just for me to even get a rate that I could offer was going to cost us $4,000, and the entry rate was 7.625. And I just about flipped my lid. I couldn't believe it. And that same day, there's a gal who works for Luneta named Christina Brown, who is a friend of mine that I grew up with. Like, we went to junior high school. I've not talked to this woman since we were like 12 or 13 years old, but we're friends on Facebook. And I saw a post that she had that morning as I was stewing, and it said, "Hey, I'm Christina Brown. I'm a loan officer. I just closed a loan," or something like that. And it kind of triggered me, and I dug in and I found her information, and I called her out of the blue. And luckily she remembered who I was, because her good friend is my sister-in-law. So there, we had that. It was easy to make that connection again. And I reached out to her, and she said, "Well, let me price that loan out for you." And I priced that exact same loan out through Luneta at a par rate, which means it doesn't cost you anything to go up or down on the rate. That's just the entry rate that was offered. They were at 6%, no cost. And I just said, holy cow, how am I even able to? I just lost 7.625, and it was gonna cost me 4 G's to get down to it. So here I am at 6, no cost, VA. And my mind blew. And I said, what kind of voodoo magic are you using? What do I need to do? She's put me in touch. That was about 9 o'clock in the morning. I had a Zoom call with Brian Crawley, who's another owner of Luneta Home Loans, at 11 o'clock. We had a great conversation. He said, we're having training at 1. Why don't you come down to the office? So I came down at 1 o'clock. After the training, I met with Braxton. He explained a lot about Luneta Home Loans, how we do our pricing, how we do our fee structures, why we're so competitive. And I couldn't unsee what I hadn't known before. And at that point, I knew that I needed to make that jump. And so I went and I talked to my previous boss, and I said, you know, whenever I would bring up rate and cost, I would always kind of get the salesmanly gobbledygook, like, you know, we're the best, we close everything on time, we're not going to be the cheapest, but we're going to be competitive, all this kind of salesman stuff. And I understand that, but when I look at something, and when I think competitive, maybe an eighth of a point, maybe a quarter of a point, you know, if I wash your car on Saturday. I don't think that it's worth $4,000 and 1.5 points, you know, and Braxton will tell us a little bit about Luneta, but that, as someone who loves people who have a service heart, veterans, firefighters, law enforcement officers, teachers, healthcare workers. I'm married to a nurse. This is a group that is very near and dear to my heart, and I want to take very good care of these people. And so it made it where I had to make that decision. So that happened on a Tuesday. I talked to my boss on Wednesday, and I started with Luneta on Thursday. And it's been the best thing in a really cruddy environment with mortgage and real estate. It's been the best thing that I could have done. It's lit a fire under me. My enthusiasm level is so much higher, because I know that I'm absolutely working for the benefit of my clients, and I can make sure that they're getting the best possible fees, best possible rates, and super good customer service. So that's a little bit about me. That's why I decided to switch from my previous lender over to Luneta Home Loans. And so with that, before we jumped into the Homes for Heroes program, I wanted to take maybe 5 or 10 minutes and introduce Braxton. So this is Braxton Young. He's one of the owners of Luneta Home Loans out of South Jordan. And I wanted him to just share with us. Yeah, jump in here, Braxton.
Got Zooms up here.
Yes, just to share a little bit about Luneta, what makes us different from other organizations that are in the same sphere, and how we may be able to serve our clients in a more natural way.
Definitely. So a couple of quick things that I'll just kind of go into the backstory of how Luneta was created. So I was actually originating loans for 7 or 8 years before I actually started Luneta. And what I started running into is kind of the same stuff that Chuck was running into. Is I needed $500 to just make a deal. And I remember secondary there, I had a relationship with the secondary manager, and he was always like, no, $500, like margins are really tight. I'm like, Mario, I can actually go and see what you guys are selling these loans for, because that's just kind of my thing. Like I go into things, I do a lot of research, I ask the why. It's like, Mario, like, you're making this much money, $500 is like less than
Like, stop being greedy.
less than like 5% of what you're making on this loan. He's like, no, like those are different, there's other fees. I'm like, Mario, I need $500, and he wouldn't give it to me. So from that point on, I was like, there's gotta be a better way, right? And so, and I wasn't like some small producer, like I've done my fair share of loans. But the really funny thing here is that when I first started, I was only doing VAs. That was all I was doing, right? So we started out VA refis. I helped them start up a VA purchase team at the time. So I've always been very purchase oriented. But when Chuck came in and was like, hey, I'm really passionate about this Homes for Heroes program, I was like, let's jump on that. Like, what do you need from me? Like, we didn't touch Chuck's comp, and we're covering quite a bit for it because it's actually like, that's where my background is. And so it's something that like, I'm very knowledgeable in, but also I know how to teach very well. I know these little tricks and intricacies on like VA loans, for example. Like literally the first conventional I did, I was like, wait, did we even get documents on that loan? Like it was so easy. Like, anyway, so that's my background. So going into starting up Luneta, I had 3 founding values that's very important to me personally. So it's transparency, education, and clarity. And the idea behind that is we're fully transparent with everything. We show, like, I'll literally go through like margins if you guys want to see like what lenders are actually making on the back end, right? Understand like, why does that change between companies? You know, how the pricing actually differs. And then going into education, like, okay, so once we've kind of opened that up and we've explained and shown you and educated, not just agents, also loan officers, also clients, here's the differences, here's why, you know, here's why rates might be different, or here's why we might be able to get a loan done that somebody else can't. And I can kind of pull back those curtains and people can see. As long as everybody understands that and they have clarity, there's no reason anybody will call anybody else except for us, right? So that's kind of how we set up our core structure. Okay. I have some notes I actually wanted to go through.
You guys have your own warehouse money, you lend or you?
So full broker, so no correspondent lines, no captive underwriting, because all that means is that we have our own little box. I don't want a box. I want to be able to go find solutions. And so, I mean, there's things like, you know, we do mobile homes without land. Like, I don't know anyone else who does mobile homes without land.
Like a chattel one?
Yeah, like, I mean, they're not fun, they suck, but like nobody else does it except 21st century. So
Right.
it's to have somebody you can come knock on our door and say like, hey, when are we closing? Or, you know, here's that document, whatever it is. It's really nice to have somebody local who can actually do that for you.
Are your rates as high as 21st?
No, they're last time I looked, they were like mid-8s, where it's for everyone on Zoom or hasn't been in the mobile home market, 21st century is between 10 to 11 typically. So the rates are quite a bit better. Now there's we can talk about that later. But yes.
All that.
Yes, we can talk about that later. But anyway, so and going into that actually, where I'm sure you guys get phone calls all day long. Like, I mean, we get phone calls too from other recruiters from other mortgage companies. Like I still get them for some reason. But anyway, going into it, like get a lot of phone calls from other loan officers like, hey, I have the best rates, use me, I have the best service, I have the most products, I'm so cool because of these reasons. I hear it all the time, so I'm sure you guys hear it 10 times more, to be honest with you. I think it's all crap. And the reason is because if everyone was actually doing that good of a job, I wouldn't be getting complaints from realtors about other lenders and other loan officers. Like we take loans from other companies because the loan officers are, it's not like they're busy, like they're just not motivated right now.
Mhm.
And so that's what's been really eye-opening to me. And don't get me wrong, like if I was in that environment where all my support staff was getting laid off, you know, I just lost my LOA, like I would be unmotivated too. And so Luneta, we're actually growing this environment. Like we've already hired an assistant this year. We have one coming back from maternity leave, and then we're looking at hiring another one. Like we're looking at scaling and actually bringing more people on because we're getting so much market share right now. And that's what's important for realtors. Right now is the time not to like sit back and kind of wait for the market to come back. Right now is the time to actually go in and start pushing and gaining market share, because your 1 or 2 deals and your 10 clients you're working with, that's going to turn into 30 deals by the end of this year. Right. And so the harder you're pushing and the more you're working, yes, it sucks because you're not getting immediate results right now. But I have a whole other presentation on this. But right now, I think is actually the best opportunity to buy a home that we're going to see probably in the next 7 to 10 years, to be entirely honest with you. And I have a whole slide deck that goes into like all the details and the information behind this. But I mean, we have 3 Luneta employees right now buying homes. That's more than I've ever had in a single month, ever. And it's because there's a huge opportunity right now. So a couple of other things I want to go through. Didn't want to take too much time on it. Again, rates, product, service, nobody's actually proving it right now. The biggest difference with, I guess, I don't want to say Luneta specifically, but the biggest difference for you guys specifically and your clients is working with Chuck, right? As you can tell, he's the most, honestly, like one of the most genuine human beings I've ever met in my entire life. He actually cares about this stuff. And the thing I love, when I first met him, he already lived by my number one rule. So I set a number one rule for all of our loan officers: answer your damn phone. If you can answer your damn phone, you will make $100 grand. Easy. Right? It's just like, it's the reality of it. But so many loan officers that they just like, it's too easy to push it off if it's a phone call, right? And so what I've always looked at is, if you can just pick up the phone, doesn't necessarily mean you're going to have great news, but at least you're going to deliver some news. And ideally, we want to get to a point where we're not even getting phone calls, that our updates are so good. And so that's like more of my role, to make sure that our process is as squeaky clean as possible. But working with Chuck, he lives by that rule already. I didn't have to train that to him. He just gets it. And so, you won't be in the dark with anything with Chuck. And so that's something that I've really appreciated, because I don't love training. I'm really good at it. I don't love it, but I haven't really had to do that with Chuck, which has been awesome. The other thing is, Jeff was talking about a niche, right? Yes, Chuck believes in just heroes in general, right? He wants to help them out. But the other thing is, like, a niche for you guys, even if that's not something that you're like truly passionate off the bat, you can grow to love these people, right? And if you don't necessarily want to do homes for heroes, I mean, there's another realtor in California. I was working with him to explain, like, hey, you need to have a niche product. And he was like, you know what? I'm going to become the realtor in California that sells pools. Like, I sell homes with pools, and that was his thing. Every home has a pool. If you don't do anything different with the pool, like, it's this, I mean, it's the same purchase contract, you're still showing the same house, like, it's not that much different. And he absolutely blew up down there. I mean, he went from, 3 or 4 transactions a year to doing over 30, because everyone was like, oh, if somebody has a pool, I need to go call Chase over here, and he's going to have a pool for me. And so it was just a weird little niche for him, and it really worked for him. So having a niche is like, and it's like, every home is like, what's your, that's my specialty, is every home. So it's just finding a way to differentiate yourself a little bit, right? And the nice thing is, like, with Homes for Heroes, yes, Chuck is very passionate. He understands VA loans. He understands nurse income, which is always terrible to deal with, right? He understands that in the ins and outs of it. But the thing is, you start to get referrals out of that, because just because he's really good at VA means that if he has a conventional come through, he's going to knock that out of the park too. He's just good with everything. But your niche, that's what you market, and then you get referrals around that. So it's really good to make sure that you set that expectation. Yes, I'm really good working with heroes, but I'm good with everyone, right? Now, yes, the heroes get either a discount or, because like we kick in, like, we don't charge underwriting fees, but we also cover appraisals for heroes as well. Yeah. So it's not cheap, but but with that, again, it's, you earn that opportunity to get referrals out of it. And that's where you actually really start to make money off your niche, right? So I went through niche. The other thing I kind of wanted to go through was, like, I guess what's important to you guys. I don't want to take too much time, but going back from that transparency thing, if you've ever wanted to ask an owner of a mortgage company anything, here's your opportunity. And I'm happy to go, like, I mean, I guess later, once we're done with this, if we have extra time, I'm happy to actually go in on, like, I can log in on your computer to our pricing engine, and I can show you guys, here's where our rates are at, here's where our margin's at. And if you see, here's Quicken, or here's USA, or here's Academy, and then you can start to see what that difference between companies are. It's not that Academy is that much better at doing a mortgage. They're not, by the way. But it's not that they are, it's just that they have a lot more overhead with it, right? We run very lean, we run based on volume, and we keep our margins slim. And so obviously everyone's like, we're not working for free, but at the end of the day, we want to make sure that we have a really good process for everybody. I think our last report that I got for our application to clear to close was 6.7 days. That was our average, which is like, I don't know of a lot of companies doing that. So I'm pretty proud of that one.
Does
It's
the bar
fast.
rate still exist?
Mhm. Yeah.
It does?
Oh,
It's
yeah.
so funny how the people say no,
Yeah,
because I was a loan officer for 12 years.
oh, cool,
Yeah,
yeah,
so.
I
do
send
you-
them out every Thursday. I send out an update with what par rate is for government loans and for conventional loans. I send that out to my realtors. So if anyone would like to be on my
Yes.
text thread, I just send it out every Thursday.
Cool.
And it's just a great way to keep you updated on exactly where we're at with those.
Do they do par rates for certain scores, or you still have to buy down to that? Or does it start at par for anybody?
if you're, so I'll kind of go into that, so when we're pricing out just a normal loan. If we're at, let's say, 740 credit with 10% down, you're gonna be at this rate right here. Now, and this is just, let's say this is where Fannie Mae, like where the actual mortgage-backed securities are actually trading at, then we're gonna have our margin on top of that. The problem is a lot of other companies, they charge so much that you can't just keep bumping up rate. There's a rate that stops, and there's a rate where the investors on the back and they understand that loan will be refinanced. So they don't want to give any additional premium for going up that extra half in rate. So basically what that means is the price that's attached to the rate doesn't change. So you can go from 7.5 to an 8 and it costs the exact same amount of money. And so it's just not giving you that extra credit. And so that's where a lot of other companies, if they're trying to charge 5 points on the back, right, that's
Right,
typical margin for a lender is between 4.5 to like 6 points. Like it's kind of ridiculous.
on the back?
Uh-huh. Oh, yeah, and then they're charging their underwriting fee and everyone's like, oh no, my underwriting fee is only $900. I'm cheap. It's like, no, it's not.
So
So
you can charge on the front and the backs still?
lenders, yes, yes. So there's some,
Okay.
yeah, we can get into that.
Sorry.
There's,
Derail the whole function.
yeah, you're good. So they will, yeah, they can get very expensive. And if they're trying to charge, let's say 5 points,
Mhm.
those higher rates aren't giving that extra margin. So they're just having to charge 2 points. That's just what it is. And so that's where you're seeing with Chuck's old company, they didn't have that margin. So they had to go all the way to the very top and then still charge on top of that.
Yeah.
So the nice thing with us, we're at 2.25 across the board. So it's quite a bit better than most retail
For
companies.
Origination fees.
That's, well, it's borrowers don't even like, that's just our margin on the back. We don't
Oh,
charge
okay.
anything on the front. So there's no underwriting fee at all on
Okay.
any of our loans, no processing fee, anything like that. But that's how we're getting par rates, is because we're not having to build in another 2.5 points into the loan. So now getting
That is
back to
very
like,
fair.
if you're like, let's say 620 credit conventional.
Yeah.
There's adjustments that we have to make, like it's not us making the adjustment, it's Fannie Mae making the adjustment, and so. That's where you start to run into like, yeah, points are required, because again, you can't just keep going up,
Okay.
so it's better to just charge it, but
Anytime there's more risk, there's more cost.
Yeah.
Right.
yeah, but that's kind of what it is, like where rates don't move. Like contrary to popular belief, rates do not move. It's the price with each rate is what moves, right? So like when Jerome Powell starts talking today, he's the Fed chair. When he starts talking, the price is going to start swinging all over the place, right? And then it'll land somewhere. And then that's just what the cost is going to be for a 6.25 and for a 5.75. And so it's the price that actually changes. Now, when it's like 5 points to buy down to a rate, that rate's just kind of no longer relevant. And so that's where we go to those higher coupons of rates. So
Okay,
yeah, so it's kind of interesting.
thank you for answering that question.
Yeah.
So I guess that kind of gets back to where we're at. Retail lenders are gonna charge all sorts of different costs, and everybody can charge what their costs are for these. So when I came in and spoke to Braxton, he showed me exactly how no matter what the loan structure was, whether it's VA, whether it's FHA, whether it's conventional, our structure was 2.25%. And I love that because lenders always have to get skinny on conventional loans because they're more competitive. And so they're always willing, when a buyer or a seller is kind of beating up the lender, oh, all right, we'll cut 50 bips off this, or we'll cut 25 bips, we'll help out, we'll get there. Why don't we just offer the best possible rate at the lowest possible fee up front and save all of the BS? And that's where
Yeah.
I was like, this is brilliant. Now, I know that going into something, I can absolutely have the best rates, lowest possible fees, and you're gonna get killer customer service. It's like, why is this isn't rocket science, and what really fired me up, sorry, I'm gonna get, this pisses me
Yeah.
off. But what really fires me up the most is especially the less savvy buyers, oftentimes your first time home buyers. A lot of times they're heroes. They're a cop that's working his beat. He's a nurse that's picking up shifts. It's a veteran like myself that don't know all the ins and outs of buying a home. You guys do. You guys have been doing this for a while. You guys understand all those. Put yourself in that veteran perspective. They don't know that they should be asking this guy to cut their fees. They don't know that they should be beating this guy up on rate. Oh, are you sure that's the best? So there's a disparate outcome for people that are less savvy in the buying process. And when I see 2.25 across the board, no matter what loan structure is, there's a lot of lenders that will get really skinny on conventional loans because they have to be competitive, but they make it back on the FHAs, on the USDAs, on the VAs. And when I saw that, I was like, I can't unsee that anymore. And I have to make the switch. And that's why I came to Luneta, because I love the fact that no matter what loan structure it is, we're 2.25. We may not be the cheapest. There may be someone doing loans in their mom's basement eating Cheetos, but for the most part, we're going to be the cheapest product out there, the most efficient, and we have the best possible rates. I think it's a no-brainer. So
I'll let you get your presentation back. If anybody has any questions on that, or if we have time at the end, I'm happy to show you guys, like, again, behind the curtains a little bit, so.
thank you, Braxton. All right, so let's get into what I really am excited about. Braxton is like an absolute numbers guy. He's the one that is checking the markets. He's following that stuff every single day so that I don't have to. I love talking and communicating with people. And I say, Braxton, what's the market doing today? And he gives us, I mean, he'll spend all day with that. He's super smart with that.
So,
Smarter than
it's long answers sometimes, because
Yeah.
there's just so much to it, but yeah.
So, all right. Next.
You got so excited to hit the back button, so I went back to the video.
All right, so here I'm going to talk to you guys today about the Homes for Heroes program, something that I'm super excited about. With Homes for Heroes, we are very excited about honoring the service and sacrifice that those people that work in the military communities, whether you're an active duty serving veteran, a guardsman, or reservist, retiree like myself, thank you. Or my Air Force friend today, so retired. But we want to honor those people, our law enforcement officers, our healthcare workers, our teachers, and it's a great environment, as well as our firefighters and EMTs. So the mission for Homes for Heroes is to provide extraordinary savings to active, reserve, and veteran military servicemen and women like you who have provided extraordinary services for our country. Our goal is to thank every hero in the nation. So simply put, we save you a ton of money when you have someone that is buying a home or refinancing. And so how we do this, the lenders and the realtors that participate in Homes for Heroes, this isn't free. For us to be able to market ourselves as a Homes for Heroes, it costs me about $1,500 a year. It's something that I'm super excited about, and not everybody wants to do that. I understand it's not for everybody, but for me, I can really help those buyers that you have that are heroes save a tremendous amount of money. And like Braxton alluded to, one of the ways that we do that is on the front end from the lenders. All the lenders who participate in Homes for Heroes across the country, they provide a certain amount of savings up front. And so we do that by waiving the underwriting and waiving our appraisal fees. So underwriting is usually $1,000 to $1,100. That's an upfront cost that has to be paid at closing. How we have things structured at Luneta, we're able to waive that cost. On top of that, Braxton eats the cost of the appraisal. So standard appraisal for a VA is what, $575?
That's $675.
$675.
Yeah.
So if we're looking at $1,100 on underwriting fees and $675, that's $1,775 on upfront fees. That is a direct savings to that hero. That's huge. The realtors that participate with this program, and so if anyone would like to, they actually contribute I'll get to this. So the realtors, they contribute 30% of their buyer sales commission that goes back to Homes for Heroes. Homes for Heroes is a 5013C nonprofit organization. There are costs that come with operating that. And so I'll get into it a little bit later as far as the Homes for Heroes Foundation. But essentially, out of that 30% that the realtor kicks back to Homes for Heroes then in turns provides a check back to that hero at closing, the equivalent of $700 for every $100,000 worth of home purchase. So for a $500,000 purchase price, 7 times 5, $3,500, they would get a check at closing, after closing, from Homes for Heroes for $3,500. So obviously it depends on the price of the house. If it's $1 million house, that just bumps up to $7,000. That check can be used for anything. If you want to buy new curtains for your house, put a half a beef in your freezer, whatever you want to use that for, that's your money. And the reason why they do that is they take that 30%, they send it back to Homes for Heroes. Homes for Heroes then turns that money and gives it back to the hero themselves, so that the realtor doesn't have to pay the tax hit on that 30%. And then the difference between what comes back to the hero and between that $3,500 and maybe it was $4,500, whatever that 30% was, comes for operating costs for running Homes for Heroes. They do advertising for Homes for Heroes. And then we have in the next slide, I'll talk to you guys about the circle of giving. So they're very passionate about giving back to the community, nonprofits, and they provide a tremendous amount. So let's talk.
Chuck, I got a question.
Yeah, go ahead.
So you mentioned you're certified with Homes for Heroes.
Yes.
Realtors can get certified. Is it a certification program or is it just a pay to play? Like,
It's kind of a pay to play. I mean, you have to want to do it. And a lot of people, we have a program called the Utah Hero Next Door here at Luneta, which is very similar to Homes for Heroes from a lending perspective. It's the exact same benefit that we're able to provide. But for those realtors that might not be willing to give up 30% of their sales commission, I understand that. That's a big number. We ask those if they want to contribute with the Utah Hero Next Door program through Luneta to kick back $1,000 at closing to the heroes. So that's a different program, very similar. That when I was looking at Luneta, I said, all right, I got to make sure that we have all the same loan structures. I got to make sure that I can do all the same things that I could do previously. And I clicked on that and I was like, oh my gosh, these guys are already doing something that I'm super passionate about. And that was the trigger that put me over the top. For me, that was a huge difference maker.
and so and an advantage for a realtor would be like marketing,
Yeah, they have,
logos.
you can
materials
provide,
to-
all of that is provided for you. You have your own landing page, so I can show you on a different time exactly all the different materials that they have. So you can order business cards. I've got some pop-up displays, things
So
like
is the
that.
cost only the 30% or is there additional? Is there upfront and?
Pay your upfront fee to be a member participating in Homes for Heroes.
Is that?
And then
incremental?
each transaction, yeah, it's annually you would pay that. And then every transaction you would do 30%. And out of that 30% comes the kickback that goes to your hero. So I have a guy closing the house Tuesday or Wednesday next week, and he's getting $4,800 back from his realtor. And that's literally the only reason he chose this particular realtor, is because they participated in the Homes for Heroes program. And you know, you could get a killer deal with it. So the Homes for Heroes Foundation, this is something that I think is really neat. So since all this came about after 9/11, so Homes for Heroes, they're based out of Minneapolis, Minnesota. They were like, how can we give back to these firefighters and these police officers after 9/11, these veterans that have given so much. And so over the years, in 2009, they went nationally. Before that, it was a regional program. But since 2009, so they've been an organization since 2001, gone national since 2009. Look at those numbers. Isn't that crazy? They've served over 56,000 members. They've provided over $104 million in savings. And the foundation has awarded over $1.1 million in hero grants to local nonprofits. I think it's incredible. And look at that number down there. 14.2 billion in real estate volume since they've been calculating it since 2009. So the circle of giving is very important with the Homes for Heroes. They really, if you guys have any type of organizations that you're passionate about, we were just talking earlier about an organization that she's super passionate about. This would be something that we could, for as a Homes for Heroes, say, put you in for a foundation grant and help you get some of that money that you need for it. So let's talk. On average here in Utah, what's the average sales price on a home here in Utah? Like 520. So on average, a hero, so anyone that falls into one of those 5 hero categories is going to save about $3,500. So that's again based on $700 per $100,000 worth of sales price. What a lot of times people don't understand is that as a mortgage lender, I can help you on a refi as well. So if there's a refi, we can still help them as a hero with the underwriting and the appraisal fees that are required for a refi. So
Through Luneta.
through Luneta. So
Okay.
in that scenario, obviously, there's not going to be a realtor involved with that transaction, but refinances, we can absolutely help them with that as well. So if you have a friend or family member who is in one of these hero categories, they need a refi for whatever reason, they missed the boat when 3% sub threes were available, but that's how it goes. Every time a hero uses Home for Heroes, they help other heroes in need. And so this is something that is really neat, is because a portion of that, obviously we have the financial benefit that gives back to the hero up front, but the remainder that goes back to the Homes for Heroes Foundation is used to provide to the foundation. And that's where they're able to contribute a lot of those monies to heroes that are in need. I'm very fortunate. I came out virtually unscathed, but there are many that haven't been as fortunate, My wife, again, works in the ER and she sees these people that come in every day, and it's very tough sometimes. So anything we can do to help, I think is really neat. But a lot of these different nonprofits that they're able to work with, I think it's a fantastic opportunity to give back. So, like we said earlier, it's very simple. You sign up, you work with us. If anyone buys or sells or refinances a home, then they receive their hero rewards. These people, there's no catch, there's no gimmick. They don't have to pay anything to participate in this. We pay to provide this benefit to them. So your buyers are going to save a lot of money on these upfront costs. It's an absolute no-brainer. They're a lot of times they're like, oh, you can do this program, but you have to do this as well. This is just a benefit to them. So these are some of the organizations that advertise and participate. I don't know, they market, they actually market and generate leads for you. I've gotten a few leads from Homes for Heroes. They're not always the greatest leads. So I've had some that they're kind of cold leads, and you follow up with them, you talk to them a little bit. The big benefit for me is that I can market myself as a member of Homes for Heroes and try and put that out there, which I have a conference on Friday and Saturday at Bingham High School with the Utah Teachers Union. And we're going to be there for 2 days at an event where there's going to be 1,200 teachers. So that's not a lead that I got from Homes for Heroes, but marketing myself as a Homes for Heroes lender with Homes for Heroes realtors that I participate with, we're going to be able to go and talk to all of these people. I'm sure out of 1,200, there's bound to be a couple that probably want my house.
Basically, just you're paying into it to help, but also just to be able to use the nonprofit name.
Correct. Yeah, and benefit these people.
Okay.
So, does anyone have any questions about Homes for Heroes specifically?
Is the credit scores for Home for Heroes the same?
Everything's the same.
Okay.
It's just if you're buying a house and you're a hero, you're going to save a lot of money.
Okay.
Period.
You
That's it.
still gotta have,
I thought that's.
It's just the benefit that they receive.
So
when
we'll-
it's a program.
We're going to get into the VA stuff. Yeah, go ahead. Ian.
So if I have a client and I want them, and it would be advantageous for them to participate in this,
100%.
but I'm not part of it. I've got to refer that to somebody or go get myself licensed
You could participate in Homes for Heroes if you want to send them to me. So I have some realtors that love this program, but they just can't afford or want to do the 30%. So for those people, we ask to do $1,000 contribution to closing. Most of them are willing to do that. And so essentially I would partner them with the Luneta program that's already in place. That's called the Utah Hero Next Door program. And so I would never throw my realtors under the bus. If you send me a lead, then I'm gonna definitely make sure that they have the underwriting and their appraisals covered. But I'm not gonna say, oh man, that's great that Ian sent you over. But if you go over to Dawn participates in Homes for Heroes. I think that would be disingenuous on my part. So if you wanted to participate in Homes for Heroes, I would certainly encourage you guys, if that's something that you find a passion for. I know you're a prior service Army guy, right? Yeah.
But I mean, 30% on top of 20% is 50%. That's a lot.
Could be. That's why you got to cap early so that you don't have to pay. Everyone's got to pay the man, right?
So how does it work if there's like grants available, first time home buyer grants or law
On
enforcement?
top of that,
How
yeah.
do we get that on top of
So
that?
with like the law enforcement grant, that's through the Utah Housing Corp. And we can do those loans for them as well. The VA grant that the state of Utah gets through the Utah Veterans Association is $2,500, as long as they're actively serving or have been serving within a 5-year period. So that's a grant that we can get anybody, no matter what type of loan structure they use. If you're doing the law enforcement grant, that has to be in conjunction with a Utah housing. And so we actually looked at that with a guy yesterday, and it wasn't the best scenario for him. So we actually moved him to another. I couldn't compete with what, because he's buying a home with Lennar, and Lennar is giving him $1 bazillion to do it, or maybe not, 30 G's. And so for him, that particular scenario just wasn't advantageous for him. So I'm going to sit down and go through it with them and make sure that it benefits them for sure, especially in the law enforcement grant. Go ahead, Jeff.
So another question about what Ian was saying. So you kind of indicated you already got somebody, this program would be great for them, send them Chuck's way. I see the advantage of the Homes for Heroes is now you get to market for clients and leads that you don't have. Do you do co-marketing with your agents?
Yes.
To kind of help get that word out?
Yeah, so there's a lot of marketing materials that are available on the Homes for Heroes website. You can upload and put all of your own information on them. You can doctor them up as exactly how you want. And then it gives you the opportunity to go out and market in those particular areas where you kind of create that niche, so absolutely. Does that answer your question?
Does it work for investments or secondary homes, or does it have to be primary? You can use
When you're using a VA, it depends on the type of borrower.
that.
So if you're using a VA loan, primarily it's for your primary residence.
But the Homes for Heroes, you can use, like if I had a nurse friend that wanted to buy a second property.
Sure.
A secondary property, they can
Yeah.
still use the Home for Heroes and do the 30%.
Absolutely.
Back in.
Yeah. Yep. Any other questions? I think we're just kind of doing it down and dirty on it, but if you guys have any questions, here is my contact information. Like I said before, with the Homes for Heroes, they have your own affiliate landing page. Essentially, it just takes you to the Homes for Heroes main page, but there's a cookie in it that anyone that signs up or says, hey, I'm interested, then it would refer them back to me. So I'm a retired master sergeant from the United States Air Force. So I kind of joking around say hero for other heroes. So that's my cell phone. You can call me, text me, reach out to me anytime on that. That's my information. So if you guys want to get a hold of me, I'll be around afterwards. We'll talk a little bit. I'll give you my business card. I'd love to talk to you guys and help any of your customers. I mean, obviously, the Heroes isn't the only thing that we do. We can do literally any type of loan structure at Luneta. But for this purpose, this is something that's very passionate to me. So thank you for hearing my spiel about Homes for Heroes.
Could we go back to that last?
Sure. Yeah.
Just leave that for a second. That'd be great.
Yeah, if you need somebody
Take your
to help out, like co-branding, flyers, that kind of stuff, we have a Gallon House who does all of our marketing. So if you just need help with like an open house flyer, send it over to Chuck, Chuck will get it knocked out. And I usually tell people, give us 24 hours, if it's faster, just ask, and we can usually do it, so.
One of the things that when I was selling loans retail. When I was selling loans retail, pricing was always difficult. People would say, hey Chuck, what's the price for this rate? And I'd have to take a loan app, I'd have to go in and price it out, and it was pretty complicated. I couldn't just pull pricing in. With the pricing engines that we have, I can just put a scenario in. So that's why on Thursdays, I send out my scenario. So it's a 740 credit score, $500,000 purchase price, and I run it for conventional and I run it for government loans. And I send out that every Thursday. On Tuesdays, Luneta also, you'll see on our Facebook feeds and stuff like that, they create a kind of a weekly snapshot of where rates are, where they are currently. And so that just helps to keep you guys informed as the market kind of ebbs and flows, curious about what happens today with the Fed. Hopefully that'll be positive.
It's more about what he says, as long as he's not stupid, we should be good.
All right, so then I wanted to talk about VA loans. So obviously being a veteran, we have anyone else in here besides Ian and I vets? Thank you for your service, Ian.
Thank you.
The VA loan, in my opinion, is the best possible loan structure out there. It is not only the most cost effective for the veteran, but it provides more leniency than you will find with other loan structures. There's things that you can get through with a VA that you cannot get through in another loan structure. And we'll talk about residual income here in a little bit, because that is kind of a sweet little gig. So the nice thing about a VA loan is that you can come into this as a veteran with almost nothing income. It's 100% loan to value.
Yeah.
There's no funding fee. That funding fee is typically 2.3% of the purchase price. So that's a big number. And so that if that person is a vet that has any sort of VA disability, that funding fee is waived. So speaking about VA disability, a VA disability rating of 10% or more, which is if you're in the military and you don't at least have 10%, I'd be very surprised. Most that's 10% is usually very easy to get. And most people, as they're separating from the service, they'll have some sort of service connected disability based on their service to their country. And so as a benefit to those veterans, they waive that funding fee, which can be, that can be a big number. If they are not able to waive that funding fee, then that funding fee is tied into the loan value. So if that funding fee is $10,000, now your loan went from $400,000 or $500,000 to $510,000, $520,000. And so the VA is not doing this for free. They tack it onto the loan structure and you pay over the life of the loan.
So I'm gonna add one thing for you.
Yeah, go ahead.
I was gonna give everyone a nice little tidbit, and I don't know if this is what you're about to say. If they file their VA claim, I mean, those claims can take like 2 years to process. If they file it literally the day before they close and it gets approved down the road, they can actually have the VA send a check back for that VA funding fee to reimburse it. Okay.
So as long as they file their disability claim prior to closing that transaction, then even if it takes 2 or 3 years, they can go back and retroactively get that funding fee returned to them.
Well, you're really adding value because of your knowledge on these, that. Because if you're doing subsequent use of you've had a VA loan before, it's 3.6%. Which, that's like 20-something $1,000 a month. And so it can be a big
chunk of change.
Yeah. So
heck yeah. One of the nice things is most every other loan structure has built-in mortgage insurance. So if you're doing a conventional loans, if you have less than 20% down, you're paying MI on that. If you're doing a USDA or an FHA, you're paying for the life of the loan mortgage insurance on that. With a VA loan, there's no mortgage insurance. That is a huge benefit to those veterans. So not only being able to potentially waive that funding fee, but not having any MI, that is a value that is massive. And these people have earned it, and I had it. All right, so I'm a pretty raw person, guys, and I don't carry a lot of BS with me, but I had a realtor one time. She's a gal that I knew from school. known her for a long time. She's down in the St. George market. I won't say any names. But I asked her, I said, hey, do you do a lot of VAs down there? She goes, no, my buyers or my sellers, they won't do VAs. They don't have any skin in the game. And I've never talked to her since then. There's other realtors that I can chase, but someone that said, you know, the VA loan
They
is
literally put their skin in the game.
the VA loan is the highest performing loan structure out there. It outperforms conventional, it outperforms USDA, it outperforms VA. These buyers are good buyers. A lot of them don't have a lot of extra money. So they're good buyers, they make good income, they have good credit, and they pay their dang bills. Go ahead. Yep,
I was
right.
gonna say, should we bust some VA myths?
Yeah.
Appraisals?
All right.
So through 2020, 21, and 22. As a percentage, we had significantly more conventional appraisals coming under value than VA. Significantly more. It was like, I think it was like 3% on VA of like all of our VA appraisals, and it was like 10 or 11% on conventional. And that's like, I mean, we have appraisers we like to work with.
You're saying that we should make VA a niche.
I'm telling you guys that, well, VA like really had issues, and when they did come in short, or if we had an issue with like DTI, I mean. Chuck and I have worked on a file before where we had, so lenders talk about DTI, right? Debt to income ratio, typically that's under 50%, you're good. We've gotten a VA file over 80% before, right? So they're very flexible, they're very easy to qualify for. And the appraisals, it's all just a myth. Like the appraisers are typically good to work with us, and they still need to make sure the value is actually there, so they can't just pull it out of a hat. But for the most part, they're always very good.
But they're also doing it to protect the veteran as well.
The property
So
with VA.
Well,
That's
they,
it.
for the most part, I mean, ultimately, as far as like, they're not as strict as FHA, so they're talking about like. Repairs needed on VA appraisals. There's little stipulations, like for example, steps, like more than 4 steps, they're gonna ask for some form of railing to be there. Most of these are like safety concerns. They don't want anything to be like, need to be renovated or redone on the property to be safe.
Sure.
Yeah.
They make the refinance process super easy, so you can do a cash out refi. That's kind of the information on that. The ERL, the interest rate reduction refinance loan, that's a streamlined process. I mean, if you're making your payment at a higher rate, obviously you're gonna make your payment at a lower rate. So they waive a lot of fees and they just fire those through. That's super easy. And then the nice thing about a VA loan, like other government loans, it's an assumable loan. So if you have someone, I have a customer in Heber right now that is doing an FHA assumable, very similar. A VA can do that as well. So if you have someone, you know, assumable loans are kind of tough because you have to have enough cash to throw into it to make the seller right so that they are willing to do it. But for the right circumstances, that's a great product.
No,
You don't have to be a veteran, but if that is tying up that veteran's VA eligibility, then until that house is paid off, that veteran cannot buy another loan. So if that person was a vet, so if I had a loan and Ian said, hey, Chuck, I want to buy your house, I'm going to assume that loan, he could do it. He could roll that eligibility from his own eligibility over. If you came to me and you're not a veteran, then that would tie up my eligibility as long as you owned that house. Does that make sense?
Yeah, you probably do.
And if I remember, the only thing that really affects is you have to have a couple of days between one closing and another one.
Yeah, usually you can do them like back to back with a day.
you can do it quick.
Yeah.
I've done them same day before. It's a little bit stressful.
You just have
It's
to
possible.
coordinate a few things prior and make sure that everybody's working together to know that it has to fund quick. And then, or it has to close early and then fund later in the day.
Yeah.
But when I was, a lot of you don't know that I also hold a license with EXP under Jeff. And so I just work on the commercial side just for referring and stuff. But before I got out of the Air Force, I sold real estate for 3 years. And my niche, because the town that I lived in, we were one of the largest employers, was out of Kingsley Field, which was an Air National Guard base there. So most of my buyers were people in that community that I was in. And so I had a lot of them where we would get conjunction, restore their eligibility and buy their next property. So we close in the morning, fund in the afternoon, and did them all the time, so absolutely can be done. Okay. What I do, Jeff?
Hit the space bar. Might have went to sleep. Is that your last slide?
Got some more. Here we go. All right, so who is eligible? Anybody who's serving, there's a lot of different variations with how somebody can serve in the military, and I'm not gonna have a ton of time on this. So if you're actively serving, typically you have to have 3 years of service under your belt before you're eligible for a VA. If you have some deployment time, that'll kickstart it and get you eligible sooner. Guardsmen or reservists, typically you have to be in because you're serving in a guard or reserve capacity, which is 1 weekend a month and 2 weeks a year. Those people traditionally have to be in for 6 years before they're eligible to use their VA loan. If they do a deployment to a theater of war, then that'll expedite the process. So I had a guy, he was in Mark Hawthorne, super good guy, helped him buy his very first house. He'd been in for 4 years, but he had done a 6-month rotation. He was an air traffic controller in the Air National Guard. So he did a 6-month rotation over to a theater of war, and that got him his eligibility. We were able to get him approved. I have a guy right now who we're closing in a couple of weeks. He's an Army guy, young guy, buying his first house. And he's 22 years old, but he did 6 months over in theater, and that helped us as a guardsman. Typically you have to wait 6 years. We were able to expedite that. So working with someone who's intimately knowledgeable about the VA process, the last 4 years that I was in the Air Force, my job was the benefits guru on base. I was a retention officer. So I helped people pull their certificates of eligibility. I helped them get their statement of service. I helped them utilize their GI Bill to go to college. I helped them convert their GI Bill from one portion to another so I could transfer it to their kids. So I'm intimately knowledgeable with this particular process. And if you guys have any questions or customers that have kind of a unique caveat, I'd love to help them with it. You had a question?
I just wondered what theater of war meant.
Okay.
I don't know what it means.
When somebody goes to a deployed environment where we're engaged in
Active
war,
war.
we're in an active war environment. So
It's interesting choice of words, theater.
it's a theater, all right.
What about government contractors? If you're a contractor, they're not eligible.
Most government contractors typically are prior service, so I'd be surprised if some of them don't, but if they're strictly a government contract, they would not be eligible for
Right,
it.
'cause I got a guy in that situation.
Oh, really?
Yeah, he said he wasn't eligible, and we tried to ask.
Yeah, so if so we started transitioning in the Air National Guard. We had a lot of people that would work as a civilian contractor during the week, and then they would be affiliated with their military position on the drill weekends. Those people are typically, once they pass that 6-year obligation, they're eligible to use the VA loan. They have a Title V position in the military where you're a strict, non-affiliated at all contractor. You don't have to hold a military obligation. And so those people, most of them come from the military and they're like, I'm tired of doing a fitness test, so I'll just become a Title V and I can still do the same job, but grow a beard and wear shorts instead of a uniform. What's that? A lot of my friends that have converted over to Title V's are like, this is the best kept secret in the military. Like, it's perfect. But most of those people have a prior affiliation to qualify. So if you're a strict government contractor on a GS scale, then you probably, unless you had a prior military affiliation, would not qualify for it. So this is a certificate of eligibility. We can pull these for your customers. So most of them will have their certificate of eligibility. Oftentimes, like this young man, he's like, I've only been in, he didn't even know what a certificate of eligibility meant. So we kind of coached him along and we were able to get that. And because he had been in for such a short period of time, when we first went to this, it pulled up, he wasn't eligible for it. We had to get a copy of his orders, upload those into the database. The VA recalculated it, and now we have a new certificate of eligibility showing the eligibility for it.
Oh, you go the extra mile. That's awesome.
We'll do it.
The extra mile on that, on those COBs, there's actually a calculation that we can do to qualify for what's called bonus entitlement, which basically means they can have, oh, is that what we're doing? Never mind.
Yeah, you come up and talk about this because he's a master with this. So the VA entitlement, the VA guarantees 25% of the loan value So that 20, what your entitlement and what your loan value is, oftentimes you can purchase a second property using the VA as long as you have enough entitlement. So I'm gonna let Braxton talk about this because this is pretty awesome.
This is my forte. So actually, if you go back one slide.
Okay.
So these are like real COEs that we've done for people. So if you look right here, it'll tell you like how much entitlement is charged on previous home. Okay, very arbitrary numbers, doesn't really mean anything, to be honest with you. So basic entitlements, 36,000, that's just what they call it.
It just means you have the full entitlement.
It's just what they call it. And then you have what,
It's a charge to them?
it's not even a charge, it's like kind of, if you think of them as having so many points, it's kind of like they've used up their points, their eligibility, right?
Okay.
So if they have 39,000 charge, that means they have no basic entitlement left. However, that's where everyone stops and they're like, oh, they can't buy a house now, right? They had a foreclosure years ago, there's nothing we can do for them. Well, what you do is there's actually a calculation. So you go to the next slide. I don't want to go through the full calculation with you, but basically we look at what the county loan limits are. So times that by what the VA's guarantee is, which is 25%. We subtract out the entitlement that's used and then we multiply that by 40. So they can come in with 100%. I mean, I'm working on one right now where they have a home in Eagle Mountain and they have a ton of entitlement used up on that property. But they're planning on doing 20% down in Bluffdale. So they just want to move a little bit closer. That's all they're doing. But they have rougher credit. So like conventional is a little bit harder to actually not just qualify for, but like the rates are not that great. So I looked at their VA and yeah, they have a ton used up, but they're looking $850,000 purchase price. And they're already planning on doing 20% down. So they can just go VA again, get the better rates, easier to qualify for. So usually with this calculation, they can go up to about 500,000 to 600,000 with no money down on the next property, and they can keep their old one. No need to refinance it.
Yeah, keep it turning into a rental.
Yeah. Yeah, no, it's a really cool program. Not a lot of people know that you can do this stuff.
So did you know that there's not a loan limit on a VA?
Yeah.
So as long as somebody has the debt to income to qualify for it, you can do that way past conforming loan limits, but it's not considered a jumbo loan.
Yeah.
So if somebody is, maybe they're an engineer now, or they previously served, now they're doing quite well. They can buy a house, $1-2 million, doesn't meet the jumbo requirements as long as they have the debt to income to support it. Wow, super.
No money down.
Streamlined process. Yeah, you can buy a house with no money down.
It's easy.
Price value.
I usually see most veterans buying a first house are kind of in that, 300,000 to 600,000 range.
And are most of them first times though, or?
A lot of them are. You see a lot of especially guardsmen and reservists in the Utah area that have got out and previously served, and then they moved into the civilian sector and have become financially stable and as their careers have taken off. So one that we did recently, 1.6 out in Draper, and he did a whole 100% loan to value on it. And he had sold his previous house, restored his eligibility, and then they were building this other home, so finally closed on it. So yeah, it's a killer deal. So these are the funding fees that we were talking about. So on a first time use, it's 2.3. On a subsequent use, it's 3.6. Again, if you have any type of VA disability rating, it waives that funding fee and they don't have to pay that at all. And then depending on the amount of down payment that they have, the more down payment they have, it reduces that funding fee for them considerably. So
Is there a minimum credit score for VA?
500.
500.
Technically speaking, there is no published minimum from the VA handbook specifically, but the lowest I have ever been able to find that would actually go through is 500. So, and that's no money down. And it's got to be a good file. Like we're not just giving out money, but it's got to make sense.
Every lender will also have different risk overlays that they're willing to do. My previous lending company, they wouldn't do a VA under 580. So,
580 to 620 is most companies. We just go a little bit further. So,
Okay.
yeah.
I'm not going to get into all this stuff. Residual income is what I wanted to talk about, what Braxton referenced earlier. When you're talking debt to income ratios, like a USDA back end has to be under 41. conventional, essentially under 50%. You get into FHA 47. With this, they do have a back end ratio, but then they also have a subsequent factor with the residual income model. So based on the area that you're at, they'll come up with
It's an arbitrary number.
it's an arbitrary number based on square footage. Essentially, this is the cost that it's going to take to support your family. If you have, this is the minimum cost to support your family of 3, your family of 4 in a 1,500 square foot house. This is what the VA is saying this should cost. So if you have your mortgage payment and this residual income metric, if you make more than that, that's when you're able to see that debt to income limit going up considerably. I just had one that we priced out the other day for a vet, and we were at 63%, got approval on it. 63% debt to income based on the residual income model.
They
So
just want money to be left over each month for you to pay, and that's why you'll see regions. They want enough money left over each month to pay your utilities, to pay for internet, to pay your cell phone bill, to pay for food, that kind of stuff. And so that's where they come up with a requirement, which I think is a really smart way to underwrite, because you'll have some people who, have tons of cars, they want to buy a huge house, whatever, but they still have money left over at the end of each month. This is one of the reasons why VA loans outperform every other type of loan product. It's not because there's no money or the rates are better. It's because of this right here. It's how they underwrite them.
one of the nice things about this is that a lot of veterans have income that's not taxable. So with a veteran, they might have VA disability. That's a check that comes from the VA every single month. That amount, whatever it is, if it's 2,000, you can plus it up by 25% and use that plussed up amount for their debt to income calculation. If they have social security benefits, BAH and BIS, I know Ian knows what those are, but that's your base assistance for housing, your base assistance for sustenance. So you're going to get your base pay each month. You're also going to get your living allowance essentially to pay for your mortgage, pay for your housing expenses, pay for your food.
When you're active?
When you're actively serving,
Okay.
so you'll get a BAH every month. I'm not gonna get it, those are the.
If your loan officer doesn't know that though, they're gonna underqualify somebody,
Yeah,
right?
so you could have somebody that. The difference, I mean, it could be another $1,000 of income when you're plussing up somebody's VA disability and plussing up their BAH, BAS.
I've seen BAH of upwards of $2,500 before, and that's for a housing allowance. And so 25% of that's what, $750, give or take.
That's a lot. So. This is what's called an LAS, a leave and earnings statement. This is basically your pay stub that you get each month that talks about what you've made for the year, what you get paid every 2 weeks in the military. So having someone who's familiar with these helps with that process. So
They're not easy to read. So you want somebody
it's
who.
pretty easy for me to read because I've been reading it for 20 years. But a lot of loan officers, they don't know what the hell this means. So they're just like, what is the number that I could use? And if you're only calculating it based on, the number of entitlement, you're not taking into account plussing up some of those other factors, you're not factoring in some of those other things. So
Can see how
appraisals.
slip through the cracks with certain.
Yeah, the reconsideration of value is what Braxton was talking about. So if they do come back and say, hey, we valued this property at a little bit, if it's a $500,000 purchase price, the appraiser comes back at 490, they call it a Tidewater amendment. And a Tidewater essentially gives you the opportunity as the realtor to go back and pull comps that maybe that particular appraiser wasn't using in that. And so they'll do a reconsideration of value. I've had a couple, we had one VA appraiser in the town that I lived in who was
I didn't know that was what it was called. Something like that actually happened to me. I didn't know.
Really?
It was that, yeah.
there you go. And so the reconsideration of value, if you get that, once you as a realtor say, all right, here's the comps that I'm looking to support the price of this house, then the appraiser will review those and they'll get back to you and they'll send you what the notice of value is. They're not going to change it off that. So you have one opportunities when they tidewater you to get some good comps that you're using, because the comps that they have might not be the comps that you used when you're doing your CMA.
Do they have an independent appraiser review it, or is it the same appraiser that did the original?
It's the same appraiser,
Yeah.
but if you have, this is another little VA tidbit that I've learned over the years. If they don't adjust it based on those new comps, and the reality is most of the time when you provide those comps, they tell us, they're like, those are the same ones we already had, that's not anything different, like, they see the exact same listings, they do a good job for the most part.
Yeah.
But let's just say that they weren't willing to consider one comp, and it was just, because this has happened to me one time. I went ahead and I called the regional loan center, so you have a bunch of little VA RLCs all over the country. I called them up, and it was Denver at the time, and I called them up, and I was like, hey, like, I'm short by $5,000 on this appraisal, like, and I honestly, like, here's these comps we provided, and they looked at it, they just overrode the appraiser. So they just gave us the $5,000. Not a lot of loan officers know you can just call them and they'll do it for you, so it's gotta make sense, like, a lot of times, whenever we have appraisal issues, I will run through it myself and see if it's worth disputing, because it's pretty easy to tell if we're gonna hit it or not, right? And if it's worth a phone call to the appraiser, and I'm the one who's responsible for calling the appraisers, and I've had them just sign off on it before without even looking. So I'm not saying that's the best practice, but
But the appraiser, they're looking at it at the benefit of the veteran as well. They're trying to make sure that this veteran isn't getting railroaded to a house that isn't gonna appraise and isn't gonna have the value, and like everything, when they're doing an appraisal on a VA, everything doesn't have to be updated and modern. It just needs to be in good functioning and working order. And so they've got to make sure that the roof is good. They got to make sure that the HVAC is operational, that all the appliances are working. All of those things that are in the loan, that veteran is being taken care of and protected.
Are there rules if they've filed bankruptcy before?
Yes.
How long?
So again, the 2 years on a VA. So one of the things about a VA is that they're super lenient, and they're great to work with. So some things that you won't get through on others, you can get through on a VA.
I'm curious on this. Have you guys ever brought an appraiser in here to go through? Okay, cool. I like real estate. I like realtors to understand like how appraisers think. Like once you actually meet one, you're like, oh, you're just a normal person. You're not trying to scam anybody. You're nice to me. So
Yeah.
Cool.
One thing I want to point out about Tidewater, if I could, because I've had that happen. And the main difference is on a VA loan, the Tidewater is discussing value before everything's finalized.
Correct.
And so that's actually a quicker process than if you were doing FHA or conventional. They finalize the appraisal before they even send it.
Yeah.
And then you have to dispute. And so I don't know if appraisers really think this way, but disputing it is different than working together to come out to, to resolve the issue.
They totally think of it different.
So yeah, you're basically second guessing their work, and they take it personal when you dispute something.
Yeah.
On a VA, you're working together to come up.
Not everybody, but sometimes ego. Stay in your lane.
And they came back and it's like, I find this value, can you send me some comps? I'm like, yeah, all day, and
Perfect.
they got even over the price.
Like Braxton talked about with the RLCs, we can make those phone calls. We've got a really good relationship with them because we do a lot of VAs. And then the information that we're pulling this out, if you want to look up and educate yourself on the VA home loan process, you can just Google VA chapter 4 specifically in the VA handbook, and that'll go over it. Yeah, I can send it to you. Yeah. So that's all we have. Appreciate you guys.
Any other questions though before we wrap?
Yeah.
Anybody on Zoom have any questions? Comments, pats on the back, great job.
Thanks.
Here's one thing I'll say, obviously Chuck is an expert in this arena, right? Like I know loan officers and you say, hey, do you do reverse mortgages? Yeah, I can do those. Do you do VA loans? Yeah, I've done some, right? It's not their lane, it's not their niche, it's not their wheelhouse.
Yeah.
Obviously, this is like, not just a passion. I mean, you were getting me jazzed up. You're passionate about what you do, but you're knowledgeable too. This is like a niche.
just like with you guys, right? We have a niche. I'm really good at this, I'm not good at
Yeah.
this, right? And we stay in that niche. So with VA and with home, whether it's Homes for Heroes or not, just VA in general, that grouping of buyers, take them to a specialist for sure. Don't have somebody say, we can do that. That really is gonna miss some of these things. Some of those slides on there is like, you mentioned a couple of different times, somebody else might not catch this and it might get undervalued or whatever. So that's my takeaway right there is stick with a specialist, and that's Chuck.
I love it. Thanks, man. I appreciate it.
Hey guys, on Zoom, see ya, thanks for sticking around.
See, who do we got? Kathy and Chase. I haven't met Chase yet. I know Mark. Nicole, I haven't met Nicole, but
Chase is my son.
I figured that.
Yeah.
So Margin.
Yeah.
I got it. Thanks, guys.
Okay, see you guys.
Yeah, we definitely need to talk.
Yeah.
I feel like I've got my own certified nonprofit.